Solana's my favorite horse in the race of the big ones. So that's the kind of flow, is Bitcoin, ETH, Solana, with Solana at the top of the pie.
Solana is a blockchain platform designed with the goal of hosting decentralized and scalable applications. The Solana architecture aims to demonstrate a set of software algorithms. This is done to eliminate software as a performance bottleneck compared to blockchain. This combination allows transactions and their scalability. The Solana mechanism satisfies the three main ideal attributes of a blockchain, as this type of cryptography is 1. Scalable, 2. Secure, and 3. Decentralized. Due to its unique blockchain design and ultra-fast transaction speeds, Solana, Sol, has become a major player in the cryptocurrency market. Having surpassed the market value of some well-known cryptocurrencies, Sol has established itself as a leading coin, attracting the interest of analysts and investors. In today's video, we will tell you about Raoul Pal's view on Solana, as he thinks that this is the coin that people should not miss in 2024. But before we get into the video, make sure you subscribe to our channel and press that bell icon to never miss an update. Following the NFT hype and growing demand from the DeFi community, the price of Solana, or Sol, cryptocurrency more than tripled during the summer of 2021. It had virtually evaporated by the end of 2022, priced at $100.86 by Sol in February 8, 2024, was similar to Solana's price in early 2021. The collapse of cryptocurrency trader FTX in 2022 particularly affected the cryptocurrency, as FTX and its sister company, Alameda Research, sold a large number of coins to avoid bankruptcy. The Solana protocol is similar to Ethereum in that it can allow the creation or exchange of non-fungible tokens. Solana, however, uses a technology called POH, or Proof of History, which allows it to achieve high transaction speeds. The Solana Foundation, creator of the protocol based in Switzerland, claims to be capable of reaching up to 65,000 transactions per second compared to 16 for Ethereum. Additionally, Solana had no transaction fees or gas, unlike Ethereum, which had increasing transaction costs. Anyone who was an investor in Bitcoin in 2011 and 12 was like a Series A investor. 2013 cycle, maybe Series B, 2015-16 Series C last cycle, Series D, and generally when IPOs happen in the market of values, in strong markets like this. And what is seen is that after the IPO, the launch would be unstable. Sometimes it sold very strongly. Facebook experienced very significant sales as its profits were repositioned. Many people started this ETF so they would want to relax, and many of them are going to move to Ethereum. They believe, rightly, that Ethereum is the most likely candidate for the next ETF. And if Bitcoin went up 100% because of this ETF, ETH would go up 300% because it is less liquid, and you will put the same amount of money into it. Also, there are many people who undo the GBTC arbitrage, close that position and sell it, and move to another ETF. There are many shenanigans, and you can see that with the net flows, the total flows were around $4.5 billion. The net flows are much smaller, around 700 million. This remains the largest ETF launch ever in the series history. A lot of GBTC guys are relaxing, and this will go away. Some will wait a few days to see if the market is stronger, whatever that may be, so it lasts a while. Then it advanced many requests at the end. That's maybe 1 billion, maybe 2 billion applications that they will have submitted. So who is the buyer? There are people who are at the forefront and who want to sell. Then you will see volatility. Expect 30 to 35% pullbacks, which could be minor, but wait for them. And this often happens when that 61.8% Fibonacci level is reached in the first leg of the bull run. It often corrects sharply. You remove the people, you remove the leverage, and then the real race begins. And the real race is the race to unprecedented heights and beyond. It usually begins around the halfway point. But this ETF will attract people because the markets have been strong. Last year, cryptocurrencies Bitcoin itself accounted for 160%. This does not go unnoticed, considering that even the NASDAQ managed to reach 50%. So it's like 3 times the NASDAQ. But let's start with RAAs, investment advisors and financial advisors. Solana is the favorite horse in the big race. The first phase is always the outperformance of Bitcoin. Next comes Ethereum. This is the point in the cycle where global liquidity increases. And when global liquidity increases and a catalyst like Ethereum ETF is in place, it will begin to gain momentum. It will continue to increase over time. And I think ETH massively outperforms Bitcoin for the rest of this cycle. So that's the type of flow. Bitcoin, ETH, Solana, with Solana on top of the pie. The other way to look at it is the idea of the IPO. All right, this gives us an idea of how these things are exchanged in context. But in reality, it is a commercial agreement between fiat world and crypto land. And it is a business deal because the capital flowing into crypto land is not a permanent residence. They are not immigrants. If you remember correctly, GDP growth is population growth plus productivity growth plus debt growth. This is not a population growth that is happening in the land of cryptocurrencies. They have to be new wallets and actual self-custody or crypto exchanges and everything else. This is a trade deal to allow TradeFi Land, RAA in Cincinnati, to get his clients across into this new world that has higher rates of return. That's why it's really interesting if we think about it in economic terms. These are savings. This is a crypto land digital economy that has other states, Bitcoin, Ethereum, Solana, you name it. Then it becomes very interesting. Things, whether it's Polkadot or Quant, or a bunch of those things enable chain link interoperability, we have trade deals, which are hot money flows that look for opportunities within a country, i.e. the ETF. We have a monetary system and interest rate systems which correspond to returns. We have a monetary system. You can call it Bitcoin. You can even call it ETH collateral in the system because it is used to borrow and borrow. We have asset markets, which are like NFTs. And there is much more. This is a new digital economy, an emerging market and the fastest growing market we have ever seen. When currency is devalued, only valuable things retain value. Fixed assets, i.e. art, cryptocurrencies, stocks, high-end real estate, that sort of thing. Things that the rich own outside of the cryptocurrencies, because everyone can do it. It is the first scarce and democratized good. Gold is doing well. Too well. This makes it worse than it should. But that's what degradation does. This devalues it, compared to things of value. Unfortunately, as humans, we have no value. Our salaries do not increase at the same rate as debt monetization. Downgrading occurs on average at a rate of about 15% annually in the United States, while wages rise more in line with GDP or simply inflation itself. Nobody advances. What happens is that asset prices rise, but wages do not. So why don't assets increase? This is the confusion everyone has. It's printing money. It's inflation. This is asset price inflation. Goods inflation. These are variable inputs. You can do more of these things. Variable items are not as valuable and therefore are not adjusted because demand in the economy is not being adjusted. It's not that people buy more things. For example, if you're young, it's like having student debt. You're 35 years old and you have student debt. You have 2 children now. Are you married? You had to leave New York or any other city. You worry about job security. How will everything change? How are you going to save? If you put money in your 401k, it doesn't seem to pay for a house. How are you going to pay for a house? That is why the millennial population is enormously and rightly attracted to cryptocurrencies, because they want and need that risk that gives them the opportunity to do what their parents had. And that is why they are attracted to investing in technology. And even in options investing, if you're investing the standard way in your 401k with your discretionary side, you're trying to get ahead by taking them, and that's a pretty solid investing strategy. Tesla is the stock for 2024. We need to ignore all the noise around Elon Musk. This company sells more electric cars and is more advanced in autonomous driving, more advanced in robotics, and more advanced in AI than any company in the world, especially in this space. Therefore, they better represent exponential age. So everything involving Musk is a sideshow. That's all for today. Let us know your views in the comments section below, and don't forget to like this video before leaving. Thanks for watching.